Hey, Michael Picola here with the Michael Picola team with Cardinal Financial. Hope all is well. As you see, I've been promoting a lot of different things. And the one thing that I've kind of talked about that has gained some interest is appraisal gap coverage. I am not promoting overpaying for a house if you don't think it's worth it. Again, this is all situational based. This is just some options that I can present you to see if it makes sense. First thing we want to talk about today is, what's going on in the market as well as how much buying power you actually still have, even in the slightly increased rate environment, because the rates today are still rather low. So you still have a lot of buying power. And again, this is also going to show you what happens if you decide to wait for it to level out, kind of going to cover all of it. And again, each of these scenarios can be built just for you. These are just kind of getting it out there into the world, just kind of what we're talking about as a basic information here. So let's talk about this. So this is what you're seeing, and let's just say this home is listed for 400,000. You're not willing to go over that. Again, that is your right. Everybody has a right to decide what they want and what they think is going to be a good value for them. This isn't obviously in a perfect world what you would want to happen. But unfortunately, a lot of families have been in this market looking for a long time, and they're tired of waiting. They're gonna do what we like to say, buying into the future, buying in future estimated cost of housing. Right? They're willing to put their money where their mouth is. They're already going to put 20% down. Their cost of the table truly isn't going to change that much, but what they're utilizing is an option that we give, appraisal gap coverage, right? They're not, we're not starting your loan underwater or anything. It's just using the guidelines to the advantage of making sure you can get in the house. Again, these are people that are going to be buying in today's low rates, but yet increasing what they're willing to do, increasing their offer value. For example, if you're trying to sell a house and somebody says, I'm going over because I want your house, I know in the future it's going to be worth that. But I want it and I want it now. You're able to tell them that you're going to cover X amount of appraisal gap coverage, so they're not losing any cash to the table, and they're willing to accept your offer because it's a low risk loan for them. Now, best scenario is if you don't have to add the additional coverage to you. But what I wanted to show here is that truly the payment difference is minimal because the coverage is there, and you're going to get into your ideal home with a monthly payment that's not really going to really hurt your pocketbook that much, and you won't even notice the difference, right? So let's talk about the naysayers that want to wait for the market to level out and kind of wait. In 2 to 3 years, when the rates stop being bought down to where they are right now, you're going to see a rate increase, and it's really going to hurt your buying power. So obviously, the longer you wait, again, it can go two different ways. So let's say, you wait for the market increase, it levels out at the 425 that you predicted it was going to be in the next 4 to 5 years, how we said right here. This is what your payment could potentially look like with the interest rate of 4%. Again, increase in the rate is only going to hurt your monthly payment and your future, as we'll show here later in this presentation. And then you can also have the option of, waiting for the prices to level out and or drop, like some people are thinking are going to happen. But still, at the end of the day, with the prices leveling out and everything, the rates are still going to rise. So essentially, what we're showing here today is sometimes if it's in the best financial decision, again, each scenario is different. So let me, schedule a time with me, and we can actually kind of discuss what's going to make the most sense for you. Again, everything is situational based, but again, in this generic situation, I'm just kind of bringing awareness to what's going on. So the main thing that we want to look at is not only the payment difference in each of the options, although minimal, we're going to start looking at the overall, right? Um, because if you're willing to put your money where your mouth is, we want this to be a scenario where you're going to be there for a minimum of 10 to 15 years. We're talking long-term home. I would never tell somebody that is just wanting to get into what I like to call an investment, buy, make it better, sell it, to get into this situation. I just don't think that is a financially good decision. Again, I only give that as an opinion. If there's something that they want to do, I 100% meeting with their financial advisor and seeing if that's in the cards for them. And of course, surrounding yourself with a good realtor who knows how to read the market for the future and is doing things for you and your future endeavors, of course. So, one thing that I want to point out is obviously these first two options are, if you were to buy today using the great interest rates that we have, versus waiting for the market to kind of even out and using the higher interest rates. As you can see, you're going to see an increase of about 30 to almost $40,000 lost over a 15-year period by just waiting. Again, what we're just showing here is taking advantage of your buying power. I hope this helps shed some light on what we've been talking about in the industry. And again, reach out to me and see how I can help you, even if you just want to talk about it. My goal with all of this is to just spread awareness, to let people know that it's a real thing going on in the market. I just don't foresee it changing. And it's going back to a previous post that I had that just houses haven't been built. So if you want to get in that forever home, sometimes you got to just get a little aggressive with it. So please, please, please reach out. And if you're tired of never getting the good ideas, or never wanting to know if it's never knowing what the future may hold, just reach out and let's talk about it. Again, I hope this helps. Again, at the end of the day, I'm not telling you to overpay for anything. I'm not telling you what to do. I'm just here to give you options and kind of show you that this can be a reality for you and your family. Again, my number one pleasure is making sure that you are serviced well and have all the options in front of you. Again, all my information is going to be down below. Just let me know how I can help. Y'all have a great day.